If you're going to invest in stocks for the long term or real estate, of course there are going to be periods where there is a lot of agony and other periods where there is a boom. I think you just have to learn to live through them, said Charlie Munger. This is quite accurate since the best investment is long-term investments. The best time to buy is when the market is at its all-time low. Knowing which growth stock to buy can be extremely tricky and difficult, but I got you. This stock could potentially grow rapidly and make you a bunch of money. Hi there, Matrix Money Maker, and in today's video, we will talk about the best stocks to buy during this recession. Every stock is worth your time and attention and could change your life. Therefore, make sure to subscribe and watch until the end. Marvell Technology. Marvell Technology is an American company based in Santa Clara. This company has more than 6,000 employees and an annual return of $4.46 billion as of last year. It is a company that is specialized in design and in the marketing of integrated communication and storage circuits for high-speed network equipment. Marvell stock has lots of potential. An interesting fact is that its price has dropped 33.72% to a price of 59.20 cents per share since the beginning of the year. The thing is that it is due to the investors of the company selling the stocks on the market. However, the company itself, Marvell Technology, has stated that cloud data center Ethernet switch port shipments have doubled during the recent years. They went up by 31% in the fourth quarter, achieving a record high market share. Fortunately, due to the increasing demand for its cloud solutions, Marvell is predicted to develop more rapidly and have a more decent performance in the next 2 years. The net sales of the company are expected to increase from $4.6 billion to $6.1 billion more than the previous year. On the other hand, its net loss is expected to grow from $421 million to $291 million, which is a big improvement. And lastly, net margins are expected to rise to 4.76% per year, resulting in the increase of the price of their stock. Analysts are pretty enthusiastic about the rising of their stock over the 12 months, predicting it to rise to $91.2, which would be a gain of 57.59%. The S&P 500. One of the best investors of all time, Warren Buffett, says that if he was to choose only one specific stock till he dies to invest in, it would have been the S&P 500. The Standard & Poor's 500 is a stock market index fund that tracks the stock performance of the 500 largest companies listed on the stock exchanges in the United States. If you have $500 or even a bit more to invest, the S&P 500 is known as being one of the best and more stable investments to make. It is one of the most commonly followed equity indices. LE Auto. Tesla is known to be the giant of electric vehicles, and it has been noticed in the rise of the share price of the company. However, there is also a Chinese manufacturer of new energy vehicles which is specialized in the sale, production, development, and design of smart electric vehicles called LI Auto. Just like the first company we talked about, the company has experienced more than a 30% loss of its value this year, bringing the price of a share to $22.12. The cause of this was the Beijing crackdown, because during this period, Chinese investors had lost interest in Chinese IT firms. Fortunately, in spite of this misfortune, the company has grown rapidly during the recent years. and is expected to grow even more during the next few years. The revenues of LI Auto are projected to increase over 88.2 billion CNY in the following year. For this reason, analysts target a stock share price of $42.24, which represents an increase of 96.37%. Bill.com Holdings. Bill.com is a software company that provides cloud-based software to small and medium companies. They provide automated software for financial operation, and its headquarters are located in San Jose. In fact, Bill's stock prices have dropped to $182.70 per share, which is a loss of 20% of its value since the beginning of the year. However, the company's net loss is predicted to decrease from approximately $987 million to $308 million this year, which is good news for investors. Furthermore, the software company is expanding even more rapidly, and revenues are expected to increase from 149.6% to $594 million in 2022, and the following year by 35.7% to $806 million the next year. Not to add that the company's net cash position is predicted to exceed $1.03 billion this year, which will potentially allow them to expand even more in the future. The next stock is Amazon. Amazon is an American company focusing on e-commerce, digital streaming, online artificial intelligence, cloud computing, and advertising. The headquarters of the company are located in Seattle, and their goal of the company is to provide and sell books, electronics, toys, housewares, music, movies, and many other goods and services. During the last month, the stock of Amazon has dropped due to the extreme economical conditions of the current society and went from $135 a share in September to less than $100. Thus, it is more affordable for investors to buy shares of the company. Even though Amazon's stock price has lost some value, it is well known that the price of Amazon's share will potentially rise up again. By this means, analysts predict that Amazon's share will go up during the following year. The target price is 137%, implying a 43.53% increase. Cloudflare Net. Cloudflare is an IT service management company whose headquarters are located in San Francisco in California. Basically, Cloudflare is a global network company designed to make everything you connect to the internet secure, reliable, private, and fast. Their goal is to protect corporate networks, employees, and devices. Net stock of the company has dropped by 28.29% to $90.59 this year, which exceeds the collapse of tech stocks. Nevertheless, Cloudflare's growth is expected to be more stable and steady. The net sales of the company are forecast to increase to $932 million, and in 2023 to $1.23 billion. Despite the fact that their losses increase, Cloudflare is expected to do 4 times with their EBITDA to $103 million this year. Analysts therefore have high expectations for the future price of its stocks. Their target is $153.44 a share, meaning an upside of 69.38% in the market. Subscribe and turn on the notification so you don't miss more videos about how to make money, personal finance, investing, and much more. Check out the latest video and all you need to know about the stock market. Take care.